Hello, Chelsea. Good afternoon. Well, negotiations over a rescue package for German airline Lufthansa continue as company executives and politicians clash over potential strings attached to a bailout. What's the latest on these discussions?
Well, the government and Lufthansa, they seem to be still at loggerheads over these potential bailout terms. Lufthansa, like all airlines, is really facing an unprecedented shock to its business. It's had to ground almost all of its airlines. It's not really having any customers coming in right now. So they need state aid. They've been very vocal about the fact that they won't survive this crisis without support from governments. But in these negotiations, the government of Germany has said that they would like to take a stake in the company. So they'd like to buy about 25 to 30% of the company, and in exchange, they would get something. They would get some concessions, things like board seats on the supervisory board, and that would allow them to have some sort of influence over the decision making at Lufthansa. This is obviously very politically controversial, but Lufthansa has really said that's not something they're interested in. They want to remain completely independent, and they don't want to have political meddling in their corporate decision making. But at the same time, the government says if we're going to be giving you taxpayer money, we want to be able to do things like ensure that you're not laying off a bunch of workers, that the bonuses that executives getting are reasonable, or that they are aligning with climate goals. So they really haven't made much headway on this issue at this point. And at the same time, all of these charges, all of these costs are continuing to pile up for Lufthansa. So there's certainly a lot of urgency in striking some sort of deal.
And Italy has been hit with a downgrade from agency Fitch Ratings as the impacts of coronavirus batter its economy. How are investors taking the surprise move?
It's been a punch in the gut to the market. This is unexpected in part because Fitch wasn't expected to give a ratings update this week, but also on Friday, S&P, one of the other major rating firms, upheld the credit rating for Italy. So it did sort of come out of the blue for a lot of investors. Fitch is raising concerns about Italy's debt ratio. They already have a debt to GDP ratio of about 135% of the economy. And at the same time, they've been hit so hard by coronavirus. It's really been the hotspot here in Europe. And now they're having to put in place economic measures to help offset the damage that it's done to the economy. And this is all really underscoring how important it is for the EU to come to some sort of agreement on a joint fiscal response. We've talked about this before, but there's a lot of political contention right now over what a joint EU response would look like. But now that Italy has been downgraded, now that we're seeing investors sell Italian bonds like we are today, it certainly adds to the pressure on EU leaders to come to some sort of response to help Italy out of this crisis.
Now, on corporate news across the Atlantic, in the U.S., Google parent Alphabet Incorporated reported a 14% jump in sales even as the coronavirus pandemic hit its main advertising revenue. How did the stock react on the trading board today?
It went straight up. Investors were quite excited by this report. The stock was up about 8% yesterday in aftermarket trading in the U.S. Now it's up about 8% again in pre-market trading. So definitely seeing a rally. And it's not just Alphabet stock that's reacting. It's really all of these Silicon Valley and tech giants. So Facebook is also rallying, Microsoft, Amazon, all of these stocks that are part of this FANG trade, this big tech trade. Alphabet's results weren't completely positive. They did see an increase in revenue, but they also flagged that they had seen a decline in revenue in March. Google makes most of its money from search engine advertising, and obviously with the corporate sector really being decimated right now, they are seeing a decline in advertising. But they do seem to be weathering this storm fairly well. They are seeing increasing ads on YouTube, for example. Their cloud revenue is increasing. And this is making investors feel a little more comfortable that they'll get through this relatively intact. But also, it's not just Alphabet. We have seen a lot of internet firms in the U.S., all of these big Silicon Valley giants, actually getting through this fairly well. So Snap, the maker of the Snapchat app, has done pretty well. Netflix has record subscribers, and we're going to be getting a lot more reports over the next couple of days. Facebook, Amazon, Apple, all going to be reporting earnings as well.
All right. Thank you, Chelsea, for updating us on those. Enjoy the rest of the day.